Welcome back to Profit Path. Today, markets came under pressure again as new US tariffs rattled investor sentiment and rate cut hopes cooled. First up, let's tackle the headline: markets slip again on tariff jitters and fading rate cut hopes. We'll break down what happened, why it matters, and what's coming next. Before we start, don't forget to hit subscribe for your daily edge. Alright, let's dive into today's action. Markets opened lower after the President administration announced sweeping new tariffs, 100% on branded drugs, heavy levies on furniture and appliances, set to take effect October 1st. That move rattled investors, coming just as expectations for aggressive Fed rate cuts continue to fade. US futures were mixed. The S&P and Nasdaq tried to tread water while the Dow lagged. Turning to today's big stock moves, a couple of names bucked the trend. Intel surged nearly 9% after reports it's in talks with Apple for a possible investment. This could be a game changer for Intel, giving them a huge cash infusion and a shot at regaining its footing in the chip arena. IBM climbed over 5% after HSBC disclosed a quantum computing trial. It apparently improved bond trading predictions by a whopping 40%. Now that's some serious AI firepower. On the flip side, CarMax collapsed roughly 20% after reporting second quarter earnings and issuing weak guidance. The company blamed a tough macro and increased used car inventory. And Oracle also continued to soften, pressured by shifting cloud outlooks. Now let's zoom out. A few key sectors showed resilience. Consumer staples and energy saw some support. Defensive plays often shine when broader markets soften, and energy benefits from persistent oil price strength. On the other hand, high-growth tech names bore the brunt of the weakness. In a nutshell, today's action reflects a market grappling with a tricky backdrop: stronger than expected economic data, rising bond yields, and lingering uncertainty on policy direction. And here's what this means for you. As we navigate these choppy waters, keep an eye on, number one, the upcoming earnings reports. These are like mile markers on the company's journey. They offer clues about how businesses are weathering the economic headwinds and adjusting their sails for what's ahead. Keep a close eye on forward guidance. It's like the captain's forecast about the company's future course. In uncertain times, this can be even more valuable than the past performance. And number three, the big question: will there be a rebound on oversold names, or will there be further rotation away from riskier assets? Expect volatility until then. In short, markets slipped again on tariff jitters and fading rate cut expectations. Intel and IBM were the rare bright spots, while CarMax and Oracle took heavy hits. All eyes now shift to Friday's inflation read. Will markets bounce back, or will the slide continue? Drop your view in the comments, and make sure to subscribe to Profit Path for your daily market snapshot. See you back here tomorrow. Until then, trade safe and smart.